Hey, David here. Very special offer that I want to put forward to you. I want to try to make this a very short video. But before I talk about the offer, I want to talk about the crude oil power method that you have seen in my blog. You've seen at 123 Day Trade. You've seen me put together a successful trading strategy that makes more than it loses. Today's trade, I see this quite an awful lot, and it has a lot to do. By the way, this is the opening range. This is 8 a.m. Eastern Central Standard Time to 8:05. This was the opening range. Notice that if I scale back here, this blue line across the board here is the pivot point, and you notice that it had trailed down pretty much the whole session. This was the high of the bar as far as volume goes at 1427. So when I look at the volume, this bar here was higher than any bar that came across in the morning as well, by the way. Here is the high bar in the morning opening range, comes in at 887. Is 887 greater than 1427? The answer obviously is no. The blue signifies a short, the red signifies a buy. Now this green line here is support S1. You notice that we were in a downtrend, and more importantly, if I bring this over here, this 15-minute chart, and then if I blow this and make this a daily chart, you can see that, and if you go to my blog, you can also notice that I was talking about this as well, that we've reaching down to the lows of March down here, March 17th. And if you scroll back, you can see that that is down here has been pretty much a new session lows we're trying to reach down to. And we got very close to reaching it today. We reached down to the S2 mark at 42.74 before it showed any sign of strength and moved off of that just a little bit. I do expect us to blow through this amount and approach the $40 a barrel, maybe even down as low as $30 a barrel. Who knows exactly where the market's going to go? I don't. But that is your 15-minute and looking at the daily chart. Now, there's a saying about catching a falling knife, and what you don't want to do, obviously, in this case, is the opening trade. You could see that the red bars would signify a buy signal, with the exception of that 1427 bar that came across in volume before. So this would have been a buy signal. Now look, we never reached above that, and frankly, I would have not taken this buy signal, knowing where we are in relation to our daily chart and catching that falling knife. You don't want to go against the grain in this case unless you see the volume to support that. And by that I mean is I would have to see some blow off red bar, blue bar volume in the excess of 3, 4, 5,000 bars. In the volume bar itself on your tick data. Showing up in 3,000 on one specific bar itself, or just boom, boom, boom. It would come across, and this market would trade very quickly, very fast, very hard. Volatility, as far as volatility goes, if you look at volatility right now, it's really down. Now, when I see it below the 2 mark, today it's 1.64, this is telling me that the volatility itself is fairly low. And you know that the 3 things that I look for as far as trade goes is velocity, volatility, and volume. Now, all 3 of those things have to be in play for me to make a trade. With that being said, if you look today, the 16.4 rounds up to 17. I probably should have had the stop loss was 43.75 on the trade, and it was run right here. I came in here at 43.58. 43.75 would have been the 17 tick stop loss. It did not reach back to that mark, by the way. If you look back, and you saw this on the trade that I did last week too. I catch the swing high, and here's the dilemma that I run into sometimes is how far do I place that stop loss onto a trade and still stay within it? And believe me, if you look at the charts, you notice that I had put a mark at this level, and also here, and I thought, well, maybe if it runs above this mark, then that would signify that, at least temporarily, that the move to the short side was over, and that would be above 43.80. And that would have been only 6 ticks difference roughly, right? To move from 43.74 where I got stopped at minus 16 as opposed to taking away minus 22, which, that isn't an awful lot to ask for the market. I'd have to adjust my profit target. So if I would have went with 1R plus on this, and then in this case 17 plus 5 more ticks, or 16 plus 6, I would have had to adjust my target on the other side of that trade. Now I end up having a winning day. I have 1 win and I have 1 loss on the day, and I think the other day that I had, Tuesday, was kind of like that too. I took away 40 ticks, 157, lost 17, netted 40. And if I look at my overall trading as far as trading goes, I mean, I'm content with what I'm doing, because that's just the way it is, the nature of the beast. I think I was up 130 today, and I look at my cash right now, I'm at 34.37. So, I mean, obviously I could do better, but I'm not doing bad. I'm not taking bad signals. I'm only taking that which I believe in. And I actually ended up taking the 43.58 again today, and that ended up being my win. Now, I was looking, if you look at the 7P area that I was looking for it to move down to, I had mentioned let me bring up my spreadsheet. I had mentioned right here at 7P is 42.29. That would have taken it below the 42.41 mark. So I was really looking at the 42.66.67. I believe we reached down to S2, which was at 42.74 as a low today, and then it proceeds to move up from that point. Now here it was 3P mark, and then I get run out right here on the 1.5P on my second trade, and I net today 13 ticks altogether as a positive day. This is the power of the trading method itself. Even in low volatility, you can still find winning trades. And what I want to do is take 3 traders, and I haven't made up my mind exactly what the cost of the course is going to be, but it's going to be a 4-week intensive course. I'm going to put an email together this week sometime in a little bit more detail as far as that goes. But I wanted to put it out there to anyone that watches my YouTube videos. If you're interested, get in contact with me. You know how to get in contact with me. I've got lots of ways to get in contact with me. Go to my blog at 123daytrade.com. Look at About Us or About Me or whatever I call it at that point. And you know how to get in contact with me. Get me through YouTube, go through my email. I have my phone numbers listed. And I mean, there's lots of ways that you can get in contact with me. But it's going to be, the way I look at it is it's going to be under $3,000, but really close, probably around the $1,000 mark for the first 3 traders, because I want to get my feet wet in training again and take you through my spreadsheet as well that I use to help you understand what I look for, what kind of values that I look, my trading rules, and how I approach the market on a daily basis. That is enough for this video. This is Dave Knight. I'm out of here. God bless. Take care. Good trading, everyone, and we'll see you on our next video that I put together. Bye for now.